Ladies and gentlemen, welcome back to the channel. In today's episode, we are going to be going over your major catalyst of this week, including some very important economic data on Tuesday as well as Wednesday and Thursday. There's actually quite a bit of data we're going to be getting this week, although the BLS has delayed some of the data. The markets really want to see. We're going to be getting like retail sales and all kinds of different things this week, durable goods orders, and the newest initial jobless claims that goes all the way up to November 22nd. So there's going to be a lot to react to this week. And I do think we're going to have likely a very strong week. I mean, it's Thanksgiving, it's the holiday season. I mean, the stores are packed out there. I went to buy a new Lions hat today. Shout out to the vets. This one is the Salute to Service edition. Oh my gosh, dude. The stores were insane, okay? I wouldn't be shocked if some of the, better tailwinds in the economy, like the holiday shopping season, affect this market in a positive way this week. Again, bunch of catalysts coming. We'll get into them in today's episode. We'll look at the earnings that you will be getting as well. We're very much to the end of earnings season, but there is some things that we are still, some earnings that we're still going to get. So we're going to get into all of that, my thoughts around Tesla stock specifically. Hit that like button, subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode. If you guys want to come join the trading community, come invest in these under-the-radar AI stocks alongside us. With that said, let's get started. Now, in this upcoming week, we're actually going to have a couple of days that are quite important from an economic data perspective. Now, on Monday, tomorrow, you have Dallas Fed manufacturing, expecting that to be around -1. You have a 3-month, 6-month, and 2-year bond auction, but that's pretty much it. On Tuesday, things start to ramp up a bit. You have the ADP employment change on a weekly basis. So 2 weeks ago, you were a -11,000. Last week, you were -2.5 thousand. And we're going to be getting a new number here. Now, here's the deal. Walmart earnings were good. Economic data, what we've gotten so far has been pretty good. You want an economy that is doing okay, not great. So what's a good number? What's a bad number? I think a good number's anywhere between positive 5,000 and negative 10,000, right? Not so bad where it's like dire recession is coming, but it's not so good that the Fed should not be cutting rates either. Okay. Now you're going to get that data at 8:15 in the morning or 9:15 in the morning. At 9:30, it says we will get PPI month over month for September. We'll see. We're expecting positive 0.3%. We will be getting retail sales month over month for September. You're expecting positive 0.4%. Again here, retail sales, personal spending is important for this economy, right? It's 70% of GDP. So you want to see a good number here, but not a super strong number. You're expecting 0.4%. That's a pretty good number if we get it, right? It could come in at 0.2%. That could be seen as good and raise odds of, the Fed cutting rates. If you come in at like positive 1, 2, 3, 4, 5%, there's going to be some doubt thrown on whether or not we are actually going to get a rate cut. Now, at 10 o'clock in the morning on Tuesday, S&P Case-Shiller home price year over year, expecting that at positive 1.6%. Month over month is expected to be negative 0.4%. Business inventories month over month expected at positive 0.1%. That feeds into the GDP report a bit. So we'll see how that changes estimates for GDP. We will get CB consumer confidence as well at 11 o'clock in the morning, pending home sales month over month and year over year, which are both expected to be negative. Richmond Fed Manufacturing Index, Richmond Fed Manufacturing Shipments, Richmond Fed Services revenues, Dallas Fed Services index, and Dallas Fed Services revenues will come out at 11:30 in the morning as well. You will also get a 5-year bond auction. Now, the Fed does not really control the 5, 7, 10, 20, 30-year bonds, right? They have a larger impact on very short-term bonds, 3-month, 6-month, 2-year bonds, things like that. So depending on how this 5-year bond auction comes in, you will see the 10-year treasury move, right? You will see the yield curve move. And that could, again, influence stocks because bond yields influence stocks. Now, Wednesday, we will be getting durable goods orders. This will be very important. Month over month for September, you were at 2.9%. You're expecting 0.2%. So not a super strong number, okay, but not super weak either. And that's really the main story, right? I keep saying this. You don't want super strong data. You don't want super weak data either. You want an economy that is chugging along, that is doing okay. You don't want a recession, but you don't necessarily want a boom right now. Now, normally I would say a boom is good, but as crypto has been dealing with this margin call situation and this liquidity event, people right now just want any sign of liquidity they can get, any hint of liquidity. They're like in withdrawal right now, okay? And, that's why Bitcoin kind of recovered over this weekend. Seems like things are slowing down. Seems like liquidity is getting better and some of the margin calls are slowing down. But, too strong of data could bring in to doubt, some of that liquidity improvement situation. Now, we will get initial jobless claims Wednesday as well for November 22nd, expecting around 224,000. That's going to be a highly watched data point as well because that's going to be the most up-to-date data that we will get this week, like current running data. November 22nd was yesterday, okay? So that's going to be important. Chicago PMIs come out at 10:45 in the morning. That's also something that Wall Street pays attention to. The Fed Beige Book comes out at 2 p.m. on Wednesday, and that's going to tell us how the Fed is looking at the economy. Now, all of this other data we were supposed to get, durable goods orders month over month for October, the goods trade balance for September and October, retail and wholesale inventories, personal income, personal spending, new home sales, all of this data we were supposed to get on Wednesday. We're not going to be getting this data, I believe, until December 16th. So this is partially why the odds of a rate cut fell, is because the BLS delayed this data. Okay, now Thursday, you're not going to have much at all, not really anything. I think Wednesday we get a bunch of data, so we're going to be responding to that coming on Thursday. On Friday, we really don't have much either, the Fed balance sheet for November 26th, but that's it. Now, as far as earnings are concerned, we do have some earnings, but you're largely getting to the end of earnings season. Tomorrow in pre-market, you have BioLine, America Airports, WeRide, not too many companies. Typically, a lot of companies don't report Monday anyways. But Monday and after hours, you have Symbiotic, you have Zoom, you have Semtech, Fluence, Keysight Technologies, and Agilent Technologies. Tuesday, pre-market, Alibaba, Neo, Abercrombie & Fitch, Analog Devices, Kohl's, Best Buy, Pony AI, Burlington. Tuesday and after hours, Dell, CleanSpark, Workday, Zscaler, Autodesk, Ambarella, PagerDuty, Urban Outfitters, and NetApp. And then Wednesday pre-market, you have John Deere. So some retailers are going to be reporting, some in the AI space, some in the robotic space. So watch the sectors here. I don't know if we're going to have any broader market movements because of these earnings. Maybe Kohl's or Best Buy, Abercrombie & Fitch, holiday shopping season. If things are good, that could be good. But we already got Walmart, Target, TJX. It looks like the holiday shopping season is off to a pretty good start so far. Dell could move things a little bit from a broader market perspective just on what they say with AI and demand for AI. But, we're largely done with earnings. So when I put all of this together, the NASDAQ went through a correction, right? NASDAQ from all-time highs still down 7.4%, but from the low, the NASDAQ was down almost 9%. When in all reality, again, Nvidia earnings were good, Walmart earnings were good, economic data has been good. The only thing that really changed was a rate cut. We went from pricing in a rate cut to not pricing in a rate cut to now pricing in a rate cut again. You've seen a little bit of a positive reaction on Friday, but there's reasons to believe, in my opinion, this week starts a year-end rally. Number one, all of that good news we just talked about should be priced into markets, right? It hasn't been. People are not even caring about that. Why? Because there's been this margin call, this liquidity situation in Bitcoin. Well, it does appear that the liquidity issues are being solved, like washing themselves out, right? So how it works is a firm gets a margin call. It specifically started with a stablecoin issue, 400,000 traders wiped out, margin calls, all of that. And then they have to sell because they're margin call. Then the price falls, then more people get margin called, then they have to sell, and then the price goes lower. And then more people get margin called, they have to sell, and that pushes the price lower. It's a snowball cascading effect because there's so much leverage in crypto. This happens it feeds into the markets. Liquidity events are not contained, okay? Collateral is in stocks, is bonds, maybe cash and brokerage accounts that would have otherwise been buying the dip in stocks, okay? So you can see Bitcoin sitting $86,800. That's about $6,000 higher than the low it hit on November 21st, which was Friday. Was that Friday? Yeah, that was Friday. So you have seen an improvement, a stabilization, and Bitcoin actually working higher over this weekend, which is something I have paid very close attention to. And Bitcoin leads the markets. Okay, Bitcoin, even on Thursday when we had the big reversal, like Bitcoin sold off about 15 minutes before markets did. Markets actually hit a new high in the morning as Bitcoin was hitting a new low. And then inevitably, stocks followed suit and followed Bitcoin. Okay, just based on what we're seeing with Bitcoin alone, you would think this week is going to be a good week. Now, as long as the economic data is not too crazy good or too crazy bad and move the odds of a rate cut too much, then you'd think this week would be really good for this market. Now, again, I think the Fed always wanted to cut rates in December. I think it was kind of orchestrated. And I think big money really got behind Williams' comments on Friday. So I don't see the odds of a rate cut going back below 50%. And historically, the Fed does whatever the markets are pricing in. So whatever Fed speakers we have, which we're about to start a blackout of Fed speakers, we're not going to be getting much economic data. So I don't really see the odds moving too much from here. It looks like we're going to actually get a rate cut December 10th, and that just helps the liquidity situation. It doesn't help much. It just helps the liquidity situation, which stabilizes Bitcoin, that helps markets, or will help markets, to actually begin to move higher into the end of this year. Specifically for Tesla stock, again, Tesla has had a lot of good news recently. Elon's compensation package being approved, Tesla's earnings were actually really good. Tesla's commentary from executives was really good. We're looking at 8 to 10 cities to start robotaxi operations by the end of this year. That may also include the beginning of 2026. Either way, there's a lot of growth coming to Tesla's AI businesses like robotaxi, and more of the conversation will be on Optimus next year. But in the very near term, you can have all of the good news you want, but if you're having a margin call or liquidity situation in crypto or wherever it is, you're not going to see Tesla stock react positively to that, okay? Now, Tesla has done a lot better than other stocks, okay? You have a stock like Oracle that's down like 40% in the past month. You have Meta that's down like 30% in the past month. And those are just two examples. You could look at other data center names that are down similar amounts, right? Tesla has done very well. It only fell. I say only because it's relative, but it's only down about 17.5% from its recent high at about $474 per share. Based on what we're seeing with Bitcoin over this weekend, and based on the lineup of catalysts that we have, and my thoughts around the Fed that actually is going to cut rates December 10th, I think there is substantial room for this market to improve this week. Like, for an example, the triple Qs, NASDAQ 100, still down 7.4% from all-time highs. At the low, you were down almost 9%. You went through a literal correction, okay? And a lot of stocks got hit way worse than that. Okay, that's just the index. Most stocks were down a lot more than that. And you see this market that has had a 6 handle, a 6 reading for the CNN Fear and Greed Index that goes up to 100. Like, you've seen some very washed out conditions in markets recently. And, you know, it's been confusing for me up until we figured out what was happening in markets, because we're like, look at Walmart earnings, they're great. Look at Nvidia earnings, they're great. Look at the data that we've gotten so far, it's fantastic. Why are stocks going through a literal correction? And it's the liquidity situation, the margin call situation in crypto. And that stabilizing and Bitcoin moving higher over this weekend is all you need to get a pretty massive rally this week. Now, it's also the week of Thanksgiving, so shorter week, markets tend to be bullish around Thanksgiving anyways, but I think there's a lot that markets have not really paid attention to, with Tesla specifically, as well as, broader market things like we just talked about, that are going to come back around full circle and start to positively impact this market and Tesla stock. The big level, as we talked about prior, is around $434 per share. If Tesla can break above that, then you could start a pretty aggressive rally to a new high, right? If the recent high is $474 per share, wouldn't surprise me if over the next couple of weeks we're approaching that $500 level. And not to mention, Elon's compensation package being approved. I think that in and of itself should be enough to send Tesla stock to a new recent high, let alone whatever news we get over the next couple of weeks, new cities where robotaxi operations are scheduled to begin. Again, I don't know the timeline of this. Elon says things, and maybe that includes like Q1 of 2026, right? But either way, there's a lot to be excited about right now in Tesla. And unfortunately, when markets are as bearish as they have been, as you go through liquidity events, none of the good news ever will get reflected in single stocks or the index, no matter how good things are, when there's an issue like margin calls happening. I do think we are set up for some pretty significant upside. I mean, as long as crypto holds and doesn't just crash again, which you never know that could happen. It wouldn't surprise me, though, as we get markets that open, that crypto actually takes a leg higher here versus lower. You fell all the way back to kind of the consolidation zone of the April crash, and I think the margin situation is kind of working itself out, where enough people have gotten margin called and there's been enough of a flush out where buying pressure actually steps back in and can move Bitcoin higher, right? And I'm picking on Bitcoin here. There's many other coins that are down a lot more, that are going through similar situations, but most people just look at Bitcoin as the barometer for all crypto. So that's pretty much what we've been doing as well. But People I've talked to as well, they're bullish on this week. And I don't think there's a lot to be bearish on. Besides the whole crypto margin call situation, we never know how bad that truly is. Like, there's not a lot of bad news. There hasn't been a lot of bad news in a while. Let me know your thoughts on this down below in the comment section. Again, this week, you really want to get above that $434 level. Getting a close above that at some point this week really sets you up for that significant upside. Now, it wouldn't surprise me if Tesla is a $480 stock by the end of this week, or $500 stock by the end of this week. That's very short term. But that's the kind of rally or move that I think we could see. Now, to get to $480 per share would be a rally of about 23%. So it's not out of the cards, but that would be a very strong week. If we did get a move to 450, that would only be upside of about 15%. So, instinctively, I feel more comfortable saying that. But I do think we could have upside as high as $500 this week, which is, 28% upside. I know, sounds crazy, but you string together two 10% days, a 7% day, a 10% day, it starts to look a lot more doable. And, that's what I think we're looking at. Into the end of this year, for sure, in my opinion, we're going to be at least $500 a share. A new all-time high is bare minimum, in my opinion. But, hey, we'll see. I could be wrong. Let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. And check that link out down below in the description of today's episode. If you guys want to come join the trading community, come invest in these under-the-radar AI stocks alongside us. Have a great rest of your day. Can I say go Lions? Go Lions. I will see you in the next one.